All right, let's get right into it. We are going to break down one of the most heated, let's say, assets in all of crypto, XRP. See, on one hand, you've got these absolutely wild price predictions, and on the other, you have some very, very sobering math. We're going to unpack both sides of this story.
You've seen it online, right? The headlines, the hype, people throwing around numbers like $10,000, $20,000, even $50,000 for a single XRP. But look, these aren't just random numbers pulled out of thin air. There are actual theories driving these predictions, and we're going to dig into what's really behind them.
And some of these theories, wow, are they ambitious. I mean, there was one viral idea that a crypto asset could be used to help wipe out the entire U.S. national debt. You see that number? That's $35 trillion. So that kind of sets the stage for the massive global financial role that some people imagine for XRP.
So how in the world do you even get to those giant price tags? Well, it starts with this really fascinating idea called the multiplier effect. Some analysts claim that because of the way the market is structured, things like low liquidity on exchanges, even a tiny bit of new money coming in can have a gigantic impact on XRP's price.
Okay, so here's the key takeaway from that. The whole argument is you don't actually need trillions of new dollars to get a multi-trillion-dollar market cap. Think about it. There's only a limited supply of XRP for sale at any one moment. So if a wave of new buyers comes in, they can chew through that available supply really fast, driving the price way up and creating this kind of snowball effect on the total value.
But okay, before we all start picking out our Lambos, this is where the skeptics come in. Pull out a calculator and ask a very, very simple question. What would a $10,000 XRP actually mean for the world economy?
And this, my friends, is where the dream slams headfirst into a brick wall of pure mathematics. You see, with 100 billion tokens out there, a $10,000 price tag means a total market value of $1 quadrillion. Just let that sink in for a second. The estimated wealth of the entire planet, every stock, every house, every bar of gold, is less than half of that. It's a number so big it's almost impossible to justify in any kind of real-world economic model.
Yeah, this simple bit of math has led a lot of analysts to just completely dismiss these crazy price targets. As one analyst put it pretty bluntly, the numbers just don't work in our current universe. It's pure fantasy. Critics also bring up a really important economic concept, the velocity of money. Think of it this way. If your goal is to move $1 trillion around the world in a year, you don't actually need $1 trillion worth of XRP to do it. You could just use, say, $1 billion worth, but you use it over and over again, really, really fast. High speed and high reuse, that's high velocity. Means the price of each coin doesn't need to be astronomical to handle huge amounts of money. So this is really the heart of the whole debate, isn't it? On one side, you've got these moonshot, life-changing predictions. And on the other, you've got more grounded analysis, which, while it throws out the quadrillion-dollar idea, it still sees some serious growth. In some cases, up to around $27. And hey, that would still be a massive, massive gain from where we are today. But here's where the story takes a really interesting turn. While the internet is busy arguing about these wild price targets, a much quieter and maybe more important story has been playing out behind the curtain, in the world of big-time institutional finance. Yup. While everyone else was glued to the price charts, some of the heaviest hitters on Wall Street took part in a funding round for Ripple, the main company building on the XRP ledger. And look at these names. We're not talking about crypto startups. These are pillars of traditional finance.
And this slide tells you exactly why they were so interested. They got to invest in Ripple at a $40 billion valuation, but the company's actual net asset value, basically what it's worth when you count up all its cash and its mountain of XRP, was almost $119 billion. So put simply, they got to buy a piece of the company for about 35 cents on the dollar. For Wall Street, that's not just a good deal, that's a steal.
Now, what really poured gasoline on this institutional fire was the end of Ripple's biggest, most terrifying threat, its years-long legal war with the U.S. Securities and Exchange Commission, the SEC. So, after this long, brutal fight that the entire crypto world was watching, a huge court ruling came down in 2023 that gave some serious legal clarity. The judge ruled that XRP itself is not a security when it's sold to the public on exchanges. This was a massive, massive win for Ripple and for the whole market, really. And that clarity, that is the key that unlocks the door to what a lot of people think is the next huge catalyst, a potential spot XRP ETF. an exchange-traded fund. This would basically give regular investors easy, regulated access to XRP through their normal brokerage accounts, and it could bring in billions in new cash.
So when you kind of zoom out and look at the whole future of XRP, it becomes really clear it's not about just one thing. It's this powerful mix of three forces. You've got the retail passion that dreams of $10,000, you have the serious Wall Street money that's betting on deep value, and then you have the original mission of actually being useful in global finance.
And that leaves us with the ultimate question, doesn't it? It really sums up the whole tension of this story. Is the future of XRP going to be written by the passionate believers and the retail dreamers? Or will it be shaped by the cold, hard calculations of the biggest financial institutions on the planet? The answer, well, it's not just about one crypto asset. It might just tell us who really holds the cards in the future of finance.